Hi, everyone. Welcome to the first kickoff quarterly call for the Messari quarterly reports in Q3. We're getting started here today with Livepeer. I'm joined by my co-author, Mihai Grigore, as well as Doug Petkanics from Livepeer. Doug, do you want to get us started? Introduce yourself and the Livepeer network for us.
Sure. Thanks, Stephanie, for hosting. Thanks to the Messari team for writing the report, hosting these calls. I'm Doug Petkanics, founder of Livepeer, where we're building the video and streaming layer for Web3. It's a decentralized network of node operators that power video streaming, video transcoding to enable developers to add video to their social apps and creator apps. Excited to dig into what we're doing and talk about Livepeer today.
Great. Thanks so much for that. I'm also going to pass it over to Mihai, if you wouldn't mind giving us a little intro to yourself and getting us started on the questions.
Thank you so much, Stephanie. My name is Mihai. I'm senior analyst with Messari, where I cover decentralized data indexing, decentralized live streaming, and Livepeer is one of those protocols that we cover on a quarterly basis. And here in front of us, we have a sample of the Q3 Livepeer report. So in a nutshell, what we do is we are reporting on the key metrics of the protocol over the quarter. And for Livepeer specifically, we have put together a table with like the core metrics with respect to the network usage, as well as with respect to the staking activity and to what extent the protocol and its participants have been able to generate revenue over the quarter. So Doug, we have a first question for you here, and this relates to the Livepeer usage. So here in this chart, we see that this quarter we have an increase in terms of Livepeer usage by 12%. Would you like to give us an introduction of what this increase means and what minutes transcoded actually signify in terms of Livepeer usage?
Yeah, absolutely. Kind of as I alluded to, a little bit of background on Livepeer and who's using it. It's developers that are building video applications, apps that look like Twitch, apps that look like YouTube, powering the video streaming and the video encoding to deliver that video to all different users on different device types is a really hard challenge to operate yourself. It's expensive to scale up using services. And the Livepeer network is an open infrastructure network that can power all of that video stuff for those applications so that the developers can focus on their users and their use case and their social features. So this chart that you show here tracks kind of Livepeer network's usage in terms of how many unique minutes of video were transcoded by the Livepeer network quarter over quarter. It's exciting to see the growth and the growth last quarter. You asked where that's coming from. It's coming from developers building these social applications and these creator-centric applications, typically connected to the Web3 space in some way. So think of a social application that lets people build their follower graph on chain or write their video data to decentralized storage. They're building on blockchain technology and they're using Livepeer. There's typically two different ways that a developer might use the network. The easiest way and the way the majority of users use it is by using a hosted service. So a service that runs all of the Livepeer nodes and funds them with cryptocurrency and interacts with the Livepeer network for them. The most popular hosted service, in fact, like the main one that's driving usage is Livepeer.studio, which is built by a company, Livepeer Inc., that I'm one of the founders of. But the second way that people use it is by running a node and using this open network directly, which is a little more technically challenging and complex, but really powerful because it delivers that promise of kind of infrastructure portability and the ability to exit from any hosted service that's really kind of aligned with the space. And you see certain applications experimenting with and beginning to run on the Livepeer node, the Livepeer media server, which is called Catalyst. And I think we might talk a little bit about that during the call.
Thanks, Doug, for the overview. And in turn, with increased usage this quarter, we also saw increased fee revenue. I believe up 7% in USD terms, but that number was quite a bit higher in ETH terms, and obviously Livepeer fees are priced in ETH. Would love to know a little bit more, about how fees work on Livepeer. Mihai and our colleague Mikey, and we're planning on writing a piece on the Livepeer fee market this quarter because we see that it has a really interesting design. So we're curious to hear from you, how that works. How does one, pay for transcoding services on Livepeer, and how that whole thing kind of adds up together.
Yeah, good question. If one of these developers runs a Livepeer node and wants to use the Livepeer network to encode video, then they pay for that service in ETH, right? But how much ETH does it cost to transcode an hour of video or a minute of video on the network? There's actually no straightforward, simple answer to that question because Livepeer is an open marketplace. Any node operator can charge whatever they want to charge in order to encode video. And whoever is using the network and wants to encode video can offer whatever level of payment they want to offer in order to meet their needs and ensure that video gets encoded correctly. So this actually creates an open marketplace, it creates competition, and ultimately leads to lower prices for users using this network. And so the way the market works is that each node operator sets the price they're willing to charge. Users that want to stream video set the price that they're willing to pay. They will discover the nearby node operators and test their connectivity. And then anyone that is willing to accept the job at the price that the node operator is willing to pay will be considered kind of in the set of node operators to perform that task. And the fees will flow to them in the form of ETH probabilistic micropayments, which is kind of an interesting mechanism for scaling payments when you're paying for 2 seconds worth of video encoding at a time via a blockchain network. This has been powerful. It's worked nicely, but I still think there's so much potential because a lot of the usage comes through the Livepeer Studio product that I was talking about before. The price that product sets forms a little bit of a coordination point for the node operators to know what they can charge if they're willing to do the work. And I think there's lots of opportunity as more operators come on the network or as Studio starts to vary the fees it's willing to pay in different regions of the world or for different types of redundancies and whatnot, for this market to become more dynamic and more reactive.
Mm-hmm. Thank you for this, Doug. We've seen that revenue from fees is like one part of the revenue accrued on the Livepeer network. The other large chunk of this comes actually from staking. And as we see in this chart, we do have a reduction in terms of the revenue from staking. However, on the very, very interesting side, we do see in this lower chart here that the staking participation actually increased this quarter. So what are your thoughts with respect to the reduction of revenue from staking rewards versus the staking participation increasing in this quarter?
Yeah, good question. So, you mentioned kind of the minutes streamed on the network were up to 36 million unique minutes of video transcoded. The ETH fees were up, 7% in dollar terms, even more in ETH terms. But the staking rewards, which are paid out to node operators and token holders in Livepeer token, are down this quarter. And what's interesting there is they're down this quarter in US dollar terms because as we've seen the whole broader kind of crypto macroeconomic markets decrease in value, the Livepeer token value in USD terms has decreased in value. And so that leads to the amount of rewards being paid out being worth less in dollars. However, it's interesting, the number of Livepeer token issued to these node operators and delegators in reward actually increased last quarter. And what that means is those who are staking and participating are actually kind of earning a bigger collective share of the network than they had previously, because those who don't stake and those who don't participate are diluted away. And so it's actually kind of a compelling opportunity if you think about it in terms of, well, the bigger share of stake I have, the more opportunity I have to perform future work and earn more fees. That's actually been, a beneficial opportunity in the previous quarter. About to drill in and address your question about this 50% participation rate, but before I do, any questions or follow-ups on the kind of staking rewards portion?
Absolutely, yeah.
Cool. Okay, so yeah, what you had mentioned is Livepeer network passed an interesting milestone during this past quarter. We, for the first time in a number of months, we surpassed 50% of the tokens on the network being staked. Why does that number matter? It matters because the economics of the protocol automatically adjust the Livepeer token issuance rate, the inflation rate, depending on whether we're above or over the 50% target for how many tokens are staked. When we're over 50% of tokens staked, the amount of Livepeer tokens issued each round decreases. And when we're below 50% stake, it increases. And the idea there is the network targets about half of the tokens participating. We want a greater incentive and more inflationary rewards issued if we're below that to encourage people to stake. And if we're above 50%, we don't have to pay out as much in terms of inflation in order to ensure that target, so we can reduce how many tokens are being printed. And this is all automatic within the protocol. It's not an arbitrary decision. It's controlled by governance, actually, what that target 50% rate is. And so it's interesting. You noticed that participation rate is rising above 50%, even though that means less tokens will be issued each round. You might be wondering why would that be the case? I think that the way that the inflation, I think there's two factors. One is that the way that the inflation adjusts is relatively slow. Yes, the inflation rate is dropping every single day a little bit because the network is over 50%. It's 0.00005% per day, which equates to about a 2% drop per year. And because only half the tokens are staked, it's really like a 4% drop on your APY per year. So, that's significant over a year, but over a couple of days or weeks or months, it's not incredibly significant. You're looking at earning a 22% APY on Livepeer right now versus 23% a month and a half ago or 2 months ago. So it's a slow reaction, which means people wouldn't all of a sudden immediately unstake just because the rate dropped a little bit. And I think the second is just a reflection of the broader macro economy, where yields are available, what alternative uses of capital look like in the moment. I think that sort of APY that you get for doing work on the Livepeer network is actually probably more attractive than many other opportunities out there, especially in light of kind of the exposure of some of the weaknesses of the DeFi system and all the kind of high yield attention that was in that space. Here, you actually have a chance to be increasing your ownership in a network that's generating real fees for a real utility like video encoding in a enormous market of video on the internet, something that's only growing.
Thanks, Doug, for. Oh, sorry. Go ahead, Mihai.
For this to zoom out a bit from this quarter, what we've been doing is to actually have a look from the beginning of the year and to visualize how actually the inflation adjustment mechanism works. And indeed, as we were saying, Doug, we can see like 4 different periods within the year, where in the first one we had actually staking participation lower than 50%, and here we had an increase in inflation, a gradual one. Then in the second one, we had staking participation over 50%, just a little bit, but that was enough to trigger a decrease in inflation. And then for the third one, we had again staking participation below 50%, which again triggered an increase in inflation. And currently we are above 50, or I would say at the level of 52% staking participation. and inflation decreases gradually. So for us, it will be interesting to see over the next couple of quarters to what extent the lowering of the inflation will also gradually bring the staking participation back to 50%. And we received one question from the larger community on this 50% equilibrium level, and we had some engagement in Twitter about this. Would you like to quickly elaborate about how actually Livepeer's experiments led to this 50% target equilibrium level, and whether that's going to continue moving on for the next quarters?
Yeah, good question. So, what's unique about Livepeer is that instead of targeting a certain inflation rate, it targets this participation rate of 50%. That's the parameter. Like, why is that? How did the community arrive at that number? Why does that number matter? It's both an arbitrary decision for it to be 50 versus 55 versus 45, right? It's kind of an experiment. It can be moved by governance, but it's rooted in what I would say some pretty basic logic. Like, you want a high participation rate. You want to be able to reward participants. You want people using the token to stake and do work on the network. But you also are a realist and recognize there's alternative uses for the token, like the unstaked token, and its role in kind of providing liquidity for people to be able to enter or exit the Livepeer ecosystem also has a valuable role, right? The ability for it to be available for creative incentives that aren't addressed directly by the protocol, such as getting tokens in the hands of builders and application developers, and people contributing in ways that are not just video encoding work, but let's say on some of the business functions or marketing functions around growing the community and adoption of the project, right? So that room for liquidity, that room for creative uses, that room for people building on top of Livepeer to make alternative uses of the token, say in governance ecosystems, DeFi ecosystems, DAOs, et cetera, is important. And so the logic of about half available for kind of security in the protocol, half available for those alternative uses was the starting point. So far, I think it's worked out pretty well. I don't think there's any obvious takeaways that says it should be dramatically higher or it should be dramatically lower, but it is, one open governance proposal and vote away from being modified should the community wish to make a proposal, have a debate, or evolve the experiment.
Thanks for all the granularity on that, Doug. I think it's good, for the community to understand this mechanism. It's, a little bit, it's kind of complicated to understand, and also like looking at and seeing like the stability that it only goes, up and down a little bit, based on the participation rate changing. I think is a really good thing to hear about when considering if one wants to stake or not. So appreciate all the detail. Switching gears a little bit here. Wanted to talk about some of the developments going on in the background with the core team who've been building out some great tools for the community to also use. You mentioned earlier Livepeer Catalyst, which is basically an upgrade to the broadcaster node and an alternative to using Livepeer Studio to connect to the network. Would love to hear a little bit more about the improvements, what Catalyst brings to the table, and how the community is responding to this new upgrade.
Yeah, so this project called Livepeer Catalyst, super exciting. It's very early, but it's you could think of it as the Livepeer node that lets you use the Livepeer network from the perspective of the demand side, from the perspective of the developer that wants to build a video application. The reason it's exciting is because the early Livepeer node was built on this open source piece of software we called Livepeer Media Server. It's a very basic video media server. It let you do basic things with video, but it was super Livepeer aware, so it knew the whole Livepeer protocol. It knew how to issue payments and discover nodes, et cetera. So basically, the starting point building block. So Catalyst is really like a whole nother level of powerful. It's built upon both the Livepeer node software combined with a really powerful video media server called Mist Server, an open source video media server that's been in development for 12 years that speaks every video protocol. It's excellent at being a building block for CDNs. It's excellent at being a building block for scalable social applications and media applications and embedded devices. It's used all over the video ecosystem already. And so now combining this server with the Livepeer aware node into Catalyst creates this new concept that exists for the first time that we're calling a decentralized media server. I know I'm nerding out on video a little bit here, as I tend to do, but typically the builder of okay, froze up for a second, but you're still with me. Typically, the builder of a video application could either deploy a media server and run it themselves as deployable software, or they could use a hosted service, right? Like a SaaS service. What a decentralized media server lets you do is it lets you deploy and customize your own software, which is really powerful as you're building and scaling your application, but access an open infrastructure network for things that need to scale, like compute, transcoding, content delivery, etc. And so you have this really powerful combination that's not just integrated with SaaS services where you need to sign up for accounts and have business relationships and whatnot, but you actually have all the power of a customizable deployable software combined with infinitely scalable open infrastructure network. And that's one reason we're really excited about Catalyst. It's open source, it's available. You can see the developer docs and get started building on it. I still think there's a lot of work to do to fully, productize it and create the right interfaces, make it really easy to use. But you see applications building directly on it already, and it's a killer building block. And it's what Livepeer Studio is built on as well, that powers, much of the streaming on the network.
Awesome. And we appreciate when you nerd out like on the video stuff, so it helps us understand it better. And I feel like there's a lot to decentralize. Like there's so many different parts of the stack. Like it's not as simple as just like an app streaming and the transcoding network. There's just so much in between. And something else you guys are working on is a decentralized media server API, as I understand, which is kind of like, so you have Catalyst and Livepeer Studio, which are the nodes that are interacting with the transcoding network, and then on the other side of that, when you have like a an end user, like a decentralized YouTube and people who are watching the videos, you have to have something in between, right, to kind of like send to the broadcasting node. So would love to hear about your work on making that a more seamless process, and when one can expect the standard DMS API to be available for broadcasters.
Yeah, so this standard DMS API sounds like a really technical concept with a lot of acronyms, right? What's really powerful about this? It's the notion that anyone building on Livepeer, whether you're building against a hosted service like Studio or you're running your own node, you're using the same interface, the same API in order to kind of interact with the video streaming capabilities. And that's really powerful for kind of a uniquely Web3 reason, which is it allows for something we refer to as infrastructure portability. It's the notion that you won't get locked in to a single vendor. You won't get started building on AWS and be unable to migrate your services to your own decentralized infrastructure, your own nodes, or even another provider. I think anyone who implements this standard DMS API would make their infrastructure portable and give vendors give users that guarantee that, hey, you're not being locked in, you're not being, yes, we're in an agreement of how we exchange value for providing this service, but you have the control and you have the freedom to build how you want, what you want, and exit if you want to or need to. And that's very different in the Web3 space versus what you see in kind of the traditional Web 2 world. Right, so this is a powerful concept. Still a lot of work to do to make progress on and finalize this. I can't give like a release date, but what I think you'll see in kind of a shorter term milestone is much like inspired by the Ethereum RPC API. This is the same API that the Ethereum nodes use, Infura and Alchemy use, which are popular hosted services for accessing nodes. They're all implementing the same API that's just defined in a wiki document that lives on GitHub. right? And it's been iterated on over the years. Everyone contributes to the updates and the next version. And I think you'll see a similar pattern followed here, where there's a wiki document put up where the community can give input, can shape what this needs to look like based off of how the APIs already work largely. And then it can become more of an open building block for others to build on as well.
You refer to Livepeer as providing infinitely scalable infrastructure. Tell us a little bit about the potential capabilities that go beyond the current implementation of Livepeer that actually use GPU computing power. What are those like at the forefront of development for Livepeer, and where do you see this going over the next quarters and years?
Great. Yeah, I always get excited when I talk about this stuff, and I also get myself in trouble when I talk about this stuff because I'm excited by it, but it's not necessarily live on the Livepeer network yet. At its core, the Livepeer network is this big network of GPUs, graphics processing units, tens of thousands of them distributed around the world, right? And these happen to have chips on them that are great for doing video transcoding, but these GPUs are also used for more general purpose compute, particularly when it comes to AI-based tasks, machine learning-based tasks, things like rendering tasks with graphics. And so there's, even though all the Livepeer software specializes in how to make use of the video capabilities, there's no reason that the Livepeer network can't expand to perform additional types of tasks. And I think there's areas that the research team has worked on, done prototypes on, or even used in beta by some of the users that are AI tasks, compute tasks that are related to video. We've talked about some of these in the past. For example, when your video is being transcoded by the network, those GPUs can also apply an AI inference algorithm to try and detect whether this video is likely to be adult content, violent content, soccer content, which is a prime source of abuse, believe it or not, copyrighted content, right? And if it detects that, it can make that information available to the application developer so they can do with that info what they will. Do they want to flag it? Do they want to route it to user review? Do they want to have it be displayed in a separate adult section of their site, for example? It's really valuable to have AI doing that as a first pass instead of humans having to do it, especially for live streams, right? And so that stuff is further along. It applies to video. There's other tasks like kind of closed caption generation, speech or kind of video and audio to text. So if we're having this live stream, can we automatically generate captions? Great open source libraries like Whisper, which can be run within Livepeer software in order to do that. And that stuff's at the prototype phase. And certainly any users that want to leverage that would be great design partners to work with to motivate how we kind of go beyond just testing and building it into the Livepeer network to meet those needs. Then I think there's a category of these types of computations which are interesting, even beyond live stream and on-demand video. You may have followed the generative art, generative video, generative creative space through projects like DALL-E 2 and Stable Diffusion, which is a great open source library. This is where people can give a prompt and these AIs can create amazing artwork based off of that prompt for use in many different use cases. And there's so much experimentation going on in that world, but the challenge is that anyone can create a prompt, and yes, Stable Diffusion is open source, but you need a large cluster of GPUs if you're going to be rendering these images very quickly and returning them to users, especially if a lot of users are doing this at the same time. And Livepeer network is a big cluster of GPUs, and our node operators are already experimenting with, hey, like, what interface do we expose? How do we run these things side by side? How could we perform Stable Diffusion rendering? And so that's really, it's one of the exciting things going on within the community. I'd love to see, whether through a grant or community-driven project or just a concerted effort, someone to take that from experiment to actual capability on the Livepeer network.
Nice. Thanks, Doug. And just, I guess, for some of our listeners that might not be familiar with the design, so you have, Livepeer node operators, which are known as orchestrators, and they're responsible for effectively transcoding pools. So you have, GPUs that are also GPUs are transcoders, and so the orchestrators are the people in the network that stake. And based on their stake, their performance, and stake distributed towards them, they route jobs to the different transcoders on the network. So want to talk a little bit about a little bit more about that mechanism, because also this quarter we saw that an upgrade to the Livepeer Explorer in Q2 really helped some of the smaller orchestrators gain profitability, because it was easier for delegators to route stake to more effective nodes as opposed to just the ones with higher stakes. But wanted to hear from you kind of more of a breakdown as to what determines if an orchestrator and therefore their transcoders are assigned work. There's a fee market on one side, but there's also the probability of being selected. So there's stake weight, but also I believe there's other factors that add into this. Would you mind breaking it down for us a little bit?
Yeah, good stuff. So a few things to unpack in there. This notion of the orchestrators. These are the nodes that you see when you visit the Livepeer Explorer, and you see kind of how much work they've performed as a proxy of the fees they've been earning in the last 30 or 90 days. And you also see how much stake they have, right? How much stake they've staked and how much people have delegated towards them. You asked about, well, how are those things related? How do these node operators win and retain work on the network? And you alluded to it's a combination of a few things. So in the purest design of Livepeer and in the kind of game theory optimized outcome, the amount of work that you perform on the network is proportional to how much stake you put down on the network. So if Stephanie has staked twice as much LPT as Mihai, then Stephanie would perform twice as much work, video encoding work on the network, and earn twice as much fees, right? The amount of stake on your node is a representation of the security that your node is providing when it does that work, because you have more at stake and more to lose if you deliberately misencode the video and cheat and harm the network. And so therefore it would be natural that a user would prefer to use a node with more security, where there's more at risk, than a node with less security, right? But when the rubber hits the road, stake can't be the only determinant of who gets work, because hey, we're live streaming video here. Like, if someone doesn't encode that video reliably in under 2 seconds, your users are gonna not have a good experience. And so the stake weight is basically the kind of the first input into, well, it's an input into how the nodes get selected. The first and most important is just what nodes are near me, what nodes can I connect to that are near the source of the video that would be able to receive this video quickly and return it to me reliably, kind of as a function of their bandwidth. So the broadcast nodes generate a set of node candidates based on who's nearby them and performing well. And then from there, they take stake weight into account as a security input that I had mentioned. And then they may have redundancy configured, so they may be working with multiple nodes at one time as sort of a backup and a primary, depending on how much they're willing to pay and how reliable they need the stream to be, right? And then their performance in real time on encoding the video is also a huge input. So, if I select Stephanie's node and she has twice the stake weight, it doesn't mean that I'm going to send 2 segments of video to her and then 1 to Mihai. It means that I started working with Stephanie, and as long as Stephanie is encoding that video and sending it back quick enough, I'm going to continue to work with Stephanie, right? And it just means that Stephanie may be selected twice as often for that initial test as Mihai. But then if my stream happens to be really long, you'll get a lot of work. If mine is really short, you'll do the work and the job will end, and you don't know that coming in. And so you do see some variation where nodes with lower stake, who are actually really performant, doing a great job, retaining the work for streams, actually end up earning a lot of fees and a lot more work. So I know I'm talking a while, but the last thing I'll say here is why game theoretically would it make sense that ultimately the stake will land in proportion to how much work is being performed. So in that scenario, let's say you have twice the stake than Mihai, but you're not performing well. And Mihai is performing well with half the stake. He'll start to earn more fees. And what that means is the APY, or the return that a delegator will get by staking towards Mihai, actually will increase, because the fees that he's sharing back will be split up amongst less stakers. And so, our dashboard shows the APY that the node operators have returned in the last 90 days. If Mihai's is higher, people will start to stake towards him. They'll provide more security on his node because he's performing better. He'll get more work as a result. It'll be less attractive to stake towards Stephanie, and you'll see that stake begin to shift. And if everyone was totally rational and everyone was paying attention to the network every day and shifted their stake around accordingly, the game theoretic outcome is that you would see stake shifted towards nodes in proportion to how much work they are reliably performing on the network, how much capacity they have, and the network would be secured accordingly. There's some other inputs like their commission and everything, but that's the kind of design. The experiment seems to be working pretty well. I'm sure there's room for improvement through governance and updates, but so far so good.
Thank you so much for this, Doug. I think understanding these dynamics of the supply are very, very important, and perhaps moving towards demand and where this is going to continue to come from. I remember our conversation from Messari Mainnet conference in September, and you also wrote a blog post on the Web3 killer apps. Could you tell us a little bit about what do you mean by that, and what kind of apps do you have in mind as being the next killers in the space?
Yeah, I'm really excited for the next 6 months because the promise of Ethereum, the promise of these blockchain technologies was that we could actually make positive impacts for the world beyond just financial speculative use cases. Right. Financial freedom is great. I'm all for the creation of an empowering alternative digital first financial system. But these technologies also have the ability to impact things like media distribution and knowledge exchange and the global economy. And social media is actually a huge area for disruption. I think we've felt so much pain around just a few centralized social media platforms in the last few years being the arbiters of truth and the distributors of information, whether that information was true or not, et cetera. And sort of kind of these open networks, open technologies, and blockchain-based primitives are really powerful tools to actually disrupt some of those social media apps. And I think we have not yet seen the killer Web3 social media app emerge yet, but I'm so excited by what I'm seeing built right now, particularly in terms of kind of early experiments with social applications, early experiments with creator-centric applications. I'm actually calling this whole category creator to community type apps, because it's really about creators creating content and distributing it to the communities that are their fans or responding to the content or engaging with it. And I think that one thing that's clear to me is that these killer Web3 social apps are not just going to be clones of the social media apps we use today. It's not just going to be Twitter, but built on Web3 tech, or Instagram, but built on Web3 tech. I think they're going to make use of the killer disruptive primitives that blockchains have enabled so far, which have really been kind of instant global crowdfunding, permissionless global open financial system, digital asset ownership, collective coordination, ICOs, DeFi, NFTs, and DAOs. Essentially, I think the killer Web3 social apps are going to leverage and include these tools within kind of exciting social and media-based products. So, seen a bunch of really inspiring apps building on Livepeer lately. The 402 and Bonfire are two great kind of creator platforms for streaming and for distributing video-based content combined with NFTs. Similar, there's an app called The Playground. We're doing an event with them tonight about creators having space for their own communities and dropping events content to them. Huddle 01, the app that we're using to create this call right now, is a amazing kind of conferencing application, which is sort of the first real incarnation of the metaverse outside of gaming. I think this is the digital world that we're inhabiting. I was talking with a gaming company this morning, Fear Football. They have this great soccer kind of manager style simulation game, and and where you can actually like own the teams and the assets digitally on chain, seeing a lot of growth, and they're excited to introduce streaming as a form of growth. So use cases like that are exciting, and you have apps like Beam that are kind of serving the filmmaker community and kind of the higher end content community, but allowing them to release their content early through crowdfunding, NFT drops, and whatnot. So, just some inspirational examples that are being built on and around Livepeer that I'm really excited about.
Yeah, it feels like every time we chat, there's just like, so many more. I haven't heard of, the majority of these names yet, so I'm looking forward to checking them out. But it definitely is exciting, to see this ecosystem just continue to grow.
They're gonna break out soon, and everyone's gonna hear about them soon, right? Like, I think Web3 Social is gonna have its CryptoKitties moment or its Axie Infinity moment, within the next 6 months, and we just want to make sure that Livepeer is helping enabling the video within those killer apps.
Yeah, we definitely agree with you on that. A colleague of ours, Dustin, recently wrote a report, I think earlier this week, talking about how there's a connection usually between what is building, like what's being built at hackathons, and then a few months later, what you see in terms of projects like really growing and gaining market share. And in the past it has been like DeFi, NFTs, and most recently it's been Web3 social. So I think also thanks to the Livepeer grants, but also Lens Protocol's helping out with that. But there's a lot of interest. So I do agree with you. 6 months, I can certainly see a lot more attention and tons more really interesting things to check out. Anyway, sorry, shifting gears a little bit. The last question we have for you is about something else that's being built at with Livepeer, and it's the verifiable video streams. As I understand, it's a new on-chain integration to help with verifying video and connecting that to Ethereum. I'd love to hear from you a little bit more about this really interesting new capability.
Yeah, this topic gets technical fast, but let's maybe just start with where users would feel pain around this right now. So, in Web 1, we saw kind of text and information being like the primary media source, and then all of a sudden images became a popular media source with the advent of things like Flickr, and then sure enough, video became the predominant source of media on the internet with YouTube. Right, and I think in kind of Web 3, if you look at like NFTs as the representation of media initially, a lot of them have been heavily image based, but it's inevitable that we're going to see more experimentation with what it means for video based assets to be provably owned and distributed and have royalties around them, and all the sorts of experiments that you see in this exploding NFT space. And so video, like an image, is kind of just a file, a single small file, and it's easy to verify that the image that you downloaded is the original image that a creator created that is associated with the NFT. IPFS lets you do that pretty easily through the content addressable hashes associated with every image. Right? Video is a different beast. If you want video to play well over the internet, you actually have to transcode it into many different formats and bit rates. You have to distribute it via CDNs and have it be cached. You have to distribute it in little pieces instead of all in one file. And so a challenge right now is if someone views a video NFT on a marketplace, that NFT marketplace had to create their own copy of the video. They had to have it encoded. They have to cache it and distribute it differently. And so the file that a user is viewing, or more importantly, a file that a user is buying in terms of an NFT, it's very hard for them to even know that they're getting the content that the creator signed and originated that's associated with this, right? Especially if you want to be able to deliver and play it back quickly. And so, Livepeer is doing a lot of work to figure out what does it mean to be able to verify this video is correct especially as it moves across NFT marketplaces, they all have their own copies, they all have their own encodings and whatnot. To verify with, as you're viewing, that you're seeing the content as distributed by as created by the original creator, and you actually have that sense of content ownership, which is so core to Web3. And yet, Livepeer is a verifiable video project that we're excited to be making good progress on this and kind of released to deliver this impact for the world.
With that, we'd like to thank you so much, Doug, for the great conversation, and for our audience at Messari, we continue to do quarterly reports on Livepeer, so we will follow closely Livepeer also in Q4. And if you'd like to follow our work, please go to messari.io/research or on Twitter @MessariCrypto. Doug, where can people follow Livepeer?
Yeah, visit us at livepeer.org. It's the home of the project. If you're building and want to kind of use our gateway, visit livepeer.studio, best place to get started building a video app. And we're on Twitter @Livepeer. So look for us there, join our Discord, join our community, very welcoming community that's been around for 6+ years. So a great place to kind of get your intro or go deep into Web3.
Stephanie and Doug, thank you so much, and looking forward to talking to you next quarter.